So what are some ways that we can legally pay less taxes?
Hi everyone, welcome to my channel. My name is Reni. In the video today, I'm going to be interviewing Mohammed from Tax Heroes, and he is an excellent accountant who will be helping us and really breaking it down and teaching us how we can pay the least amount of taxes possible in a legal way.
Hi Mohammed, thank you so much for coming on my channel. I really do appreciate it. Could you please introduce yourself to my audience and tell us a little bit about you and your practice?
Sure. Thanks for having me on. My name is Mohammed. I'm one of the partners at Tax Heroes. We're an accounting firm specializing in Canadian tax for business owners and professionals, really just doing things like compliance, like filing the returns and financial statements. And also just planning, advisory, restructuring, things like that. I also really have like a big interest and big passion in just educating people about the basics of tax or even the tax implications of various decisions they have. So even basic things like what happens when you buy a rental property, or how can you reduce your taxes on your personal return even more. Other than that, we're a fully remote firm. We work with people all across Canada, other than Quebec, because Quebec is different and stuff. Hopefully you don't have too many Quebec watchers, and if you do, I'm sorry. But yeah, that's a little bit about us.
Nice. Thank you so much for being here. And as you said, you really focus on education, and I can attest to that. The way that I found Mohammed was actually through his Twitter, and I'll leave it down below. I think everybody should follow him on Twitter and just learn more, because he drops these gems, and as a small business owner, they're very helpful. But even if you're not a small business owner, you file your personal income tax, I think will also be very helpful for you. So today, as I said in my intro, everyone, we're going to talk all about personal taxes and how to legally pay less taxes. I want to emphasize the legal, no tax evasion over here. So Mohammed, could you tell us what personal taxes actually are? Like what does it mean to do your personal taxes, and how do they differ from other types of taxes?
Personal taxes are really different in who pays the tax and what the tax is based on. And that's how really all kinds of taxes are differentiated. So for personal tax, it's personal, like individuals themselves are paying for it. It's not corporations, it's not trusts, it's not anything else. And what it's based on is your income, your earnings for the year. So there's other types of taxes like corporate income tax, that's corporations who are paying it, and it's also based on the corporation's income. There's property tax, which is based on, the property values, and GST, HST, those types of tax. That's based on the value of the good and service that you're getting. So personal income tax is differentiated in that individuals pay it on their earnings for the year. And it's also actually the government's number one source of revenue. So it makes up over 50% of what the government gets, how the government earns its money. It makes up 50% of that. And that surprises people sometimes. And like it even surprised me when I first saw it. And that's basically because like you typically think corporations are, they're big, they're making all this money, they probably pay a greater share of our taxes, but they actually only make up about 20 to 25%, and individuals make up the most.
That's good to know. I'm surprised too. 50% is huge, but I guess every single person works, right? Well, not every single person, but a lot of us do work, and we're all getting taxed on that money that we are making. So,
yeah. And tax is relatively high too.
Yeah, I was going to say, especially compared to the corporations. Like now I have my own corporation, and I'm like, why is this entity paying less taxes than me as an individual, right? So I think that maybe they should increase corporate tax rates. I don't know, but that could be a whole other debate. So how do we actually calculate how much we pay in taxes every year?
It's a little complicated, and it's outlined in the Income Tax Act, but unfortunately, the Income Tax Act, despite it applying to everybody, it's not easy for just a regular person to pick up and read it. So what I do is I kind of take all the wordings from there, take out the different CRAs and Ministry of Finance interpretations, and I put it all together and I break it down into like 3 separate calculations. So really your first calculation is income minus deductions equals taxable income. And that's really the base of what your tax is based on. So you get taxed based on your taxable income. And so this is probably the most important of the 3 different calculations. And income, it includes worldwide income. It's not just income in Canada. If you earn income in like Australia or anywhere else, you actually have to report that income on your personal tax return. And then you have deductions, which kind of reduce your income. And then that gives you your taxable income. And then when you take that taxable income and you bring it to the second part of the calculation, which is taxable income multiplied by your tax rates equals like your tax otherwise payable, or what I just call it is tax before tax credits. And so this one's just really applying your tax rates to your income. And this is, although it kind of seems straightforward, it's probably one of the most misunderstood parts of tax, how tax rates and how our marginal tax system works. And I'll get into that a little bit after. And then the last part of the calculation is you take your tax before credits, you apply your tax credits to it and any tax payments you made, and then that's how you get your tax refund and your tax owing. So these three things really make up the calculation. Your income minus your deductions equals taxable income. Pull that over, taxable income times tax rates equals your tax before credits, and then your tax before credits minus your credits equals your tax owing or your tax refund. And it could really just be broken down into those three things and doesn't need to be complicated any further than that.
I understand it, but maybe because I have kind of an understanding of taxes, but could the average person do this by themselves, or would this be something they're reaching out to an accountant to help them with?
So in some cases, I think they could do it themselves. Like there are some free online softwares, Wealthsimple, TurboTax, they always kind of try to add in fees and stuff, but there's a bunch of a different kind of free filing softwares. And if you have like a simple situation, it's not that bad. But when things get a little more complicated, like if you have a rental income or employment expenses or like self-employment expenses, then that's when you really kind of have to hire an accountant. Or some people just don't feel comfortable doing their own or preparing something on their own, even if they're using a software. And in those cases, like you might have greater peace of mind just working with an accountant versus doing it on your own. So in those cases, I'd probably still recommend reaching out to an accountant.
Yeah, it makes sense. They went to school for it. Like you went to school for this, when you did your CPA, right? That's a lot of work. So I'm sure you know a bit more about this than us. And I'm a big proponent of outsourcing to those who know more than me. So the big thing, and I'm sure the reason why a lot of people clicked on this video is because everybody complains about taxes, especially here in Ontario and across Canada. We pay a lot of taxes and we all want to pay less taxes. So what are some ways that we can legally pay less taxes?
Yeah, so the thing everybody wants to know, how to pay less taxes. I think the single most important thing before you think of any deductions or anything like that is really your mindset. And it sounds a little lame, but really your mindset is more important than anything. Most people will think about taxes reactively. And what that means is after they're doing their tax return in April, when they have to file it, they're thinking, oh, what deductions can I get? What credits can I get to kind of maximize my tax refund? But really the people who pay the least amount of tax and save the most amount of tax on a year-to-year basis are people who are thinking of it proactively. So not just, I have to file my return. How do I get the most refund? It's how do I go into this year reducing as much tax as I can for next year so that I can get the biggest refund next year? Or even greater than that, how do I save tax for the next 5 to 10 years? How do I save tax when I'm about to die? That mindset shift is easily the most important thing I've seen in people saving tax. And that's just from a general perspective. Once you make that mindset shift, because it's easier to do things proactively rather than reactively in order to save tax, it's like taxes are your biggest expense in your life. Like the average person will spend more in taxes than their home, their car, but they'll spend months looking for a home. They'll spend months looking for a car. And it's just crazy that like a lot of people won't spend more than like an hour a year on their taxes when it probably has the greatest return on their investment in terms of time. So just really shifting your mindset. And then if you want to like actionable items of how to save tax, then what I'd do is I would take it back to this calculation. Income minus deductions equals taxable income minus tax credits equals tax before credits, and then tax before credits minus credits equals refund or tax owing. And I would kind of break it down in each distinct part. So the first part is really income minus deductions equals taxable income. So first I'll start with income. And I would say, how do I reduce the income I have to report? The easiest way to do that is to find other ways, earn income that doesn't have to be reported. And what's the single easiest way you could do this? It's to make use of your registered investment account. So your TFSA, your RRSP, your RESP, all the new FHSA account, which is like an amazing account. Recommend everybody sign up for it. These registered accounts let you earn investment income without having to report it on your personal tax return. That's a huge advantage. eventually for RSP and RESP, when you withdraw, you do eventually have to pay a little, like some tax. As you're kind of earning it throughout the years and stuff, and you're not withdrawing, then that's money you're earning without having to pay tax, without having to report it on your personal tax return. So that's probably the single greatest thing you could do for your taxes, is just use those accounts. Also, if you have family members, you could use their TFSA accounts if they're not using it. I'm a huge proponent of that, but also understand that there are legal ramifications, like if they can just kind of take your money and run away because it is their account. So make sure you have some trust there before you do that. So that's in terms of your income. Then we look at your deductions. How do we maximize your deductions?
What is a deduction?
Great question. So deductions are basically things that reduce your base, your income that you get taxed on, right? So if I had, let's say, $100,000 of income and I had a deduction of $20,000, then my income is $80,000. And so I only have to pay tax on $80,000 versus $100,000. And so it provides kind of huge tax savings. This kind of gets misconstrued sometimes, is the government giving you money back. So some people like to think of write-offs as, oh, the government's paying for it. No, you're still paying for it, but you're just paying less tax on it. So it's still beneficial, but it's not you getting a dollar for dollar back from the government for incurring that. And some of the most common deductions are really like RSPs, childcare expenses. Those are your more typical ones. There are also a bunch of other ones, but those are generally the more typical ones that you'll see on a year-to-year basis for your average person. And so you want to maximize your deductions where possible. Then you get your taxable income. You take your taxable income to the second calculation, and then you have your tax rates. Now, your tax rates, it's not it's kind of fixed, right? But there are certain tricks and tips here. So one thing to keep in mind are dividends and capital gains, which are two forms of income, are taxed at lower rates than regular income, like employment income or self-employment income. And so if you earn those types of income, as opposed to earning a business or employment income, then you'll be taxed less because those have lower tax rates. The only issue is you can also earn capital gains and dividends typically in our RSP or TFSA or any of those registered accounts. And so it's better to earn it in those accounts where it's effectively tax deferred or tax free, rather just than earning it in your regular income, in your regular name, and paying lower tax rates.
So would you recommend that it's like after you maximize your TFSA and your RSP, then you would invest outside of that and then get those dividends? Is that the approach?
Exactly. Yeah. So once you've maximized all those accounts where possible, then you can start earning it in a non-registered account in your name, and then get subject to those low tax rates that those incomes bring with it. And then we have taxable income times your tax rates, and that gets you your tax before credits. And then you bring that over, and then you apply your credits. And credits, there are a whole bunch of credits, and the CRA has a listing on their website. I'm happy to delve into it in this call, but there are a lot of credits that typically get missed when you're filing your tax return. So it's always good to kind of just read through the credits, go through it, and make sure you're not leaving anything on the table that could potentially reduce your taxes.
Yeah, thank you so much for that. I learned a lot from that, but I think I really like what you said about how we should be planning ahead for our taxes, just like we do for any other big thing. Taxes are a huge expense that we pay. So if you plan ahead, then you can actually save more taxes in the long run. So I know you did mention some credits. What are some examples of some credits that maybe are commonly missed, or some that are very common that people take advantage of?
Got it. So some typical ones that I typically see missed are tuition fees. So if you go to school, if you go to like post-secondary education, college, university, you should still be filing your tax returns. And the reason why is that you can report your tuition that you've paid on those tax returns, and then you can use them in future years when you might have income. And these are huge tax savings when you actually apply them. Like your first tax return after you graduate, you can get a refund of several $1,000s. So making sure you're really filing your tax returns each year just to take advantage of the different credits. There's also other indirect credits that kind of aren't on your tax return, but you get through the year when you file a tax return. So definitely you should be filing each year. Other things that are relatively important are if you buy a home, there's a home buyer's amount credit, which is worth about $1,500 if you buy a home that you live in. There's the disability credit, which so many people might be eligible for, but they don't apply, especially like your lower income, your immigrants. They unfortunately, they're not aware of these things, and they don't apply for these credits, and it could save them like up to like nearly $2,000 a year in taxes. So relatively big tax savings each year just from kind of getting that disability tax credit. There's also a bunch of other credits, donation credits. So you might be making like donations to a church or like your religious temple, and you might be making in cash, not really tracking it. And you can get up to 45% of your donation back depending on like how many donations you made and what province you're in. And so really getting your donation receipts and claiming them on your tax return saves you a bunch of tax, especially if you're making like relatively quite a bit of donations. And just taking advantage of, your RSP deductions, if you have children, childcare deductions, and really any other like your home office expenses or employment expenses. If you start a business, you have a lot more options on what kind of deductions you can take rather than if you're just employed. So starting a legitimate business and then incurring those expenses and writing off those expenses help you reduce tax. You have medical expenses. Like there is a high threshold of medical expenses that you have to exceed to claim them. But if you have any like major procedures during the year, like LASIK or braces or anything like that, you can claim that. And it's usually you only can claim what you pay in the year. So some people will do like installment plans, but I usually say pay as much as you can in 1 year. So you can pass that threshold and claim a lot more of the expense in that year.
Okay.
And there's so many, and like I've only covered maybe like a fraction, but you can always check the CRA's website. They have a lot more information and a list of really all the credits that are available.
Okay, perfect. I was just about to ask you if someone wanted to know where they all are, they can go to the CRA website, and I'll make sure to leave it linked down below. So what are some common mistakes that you see people make with their taxes, other than maybe like missing these credits and not filing them? What other mistakes do you see people making with their taxes?
Yeah, so the biggest one I would say not filing your return, just because there's so many credits you might be missing out on just by not filing your return, but also not including your worldwide income. So there's people who will have income in another country and think they don't have to report that, but technically it does have to be reported. Just record keeping in general, people who don't keep good track of their expenses and their income. So that always causes a challenge, especially if you have like vehicle expenses, then you would have to keep a log. And that's something that typically gets audited fairly frequently from the CRA. If you're self-employed, not setting tax aside, because when you're an employee, they're just deducting that tax. They're paying it for you. You're in the clear. You're just like, yeah, I'm going to get my refund at the end of the year. I'm okay. But when you're self-employed, you actually have to set that money aside. And I've seen people with like whole savings for a year, or even like lifetime savings, have to go to tax because they're not properly budgeting for that. If you have a lot of business income, there's some tax savings you can experience really by incorporating. But also I've seen a lot of people who have incorporated prematurely when they don't have a lot of business income and it doesn't make sense. So that's just something to keep in mind. Not charging sales tax when you have a business and you have over $30,000 of sales or whatever the case may be. And then just I've seen a lot of more, these are kind of the simple ones, but I've seen a lot more complicated situations. People are doing different things with their investments. So they might have a home that they decide to rent out, a home that they decide to live in. And there's implications for doing those things. And it does get a little complicated by just kind of seeking out professional tax advice when those things happen.
Yeah. So thank you for all these tips. I think it'll be very helpful. And I hope everybody is listening, taking notes. And if you need help, definitely reach out to Mohammed. But Mohammed, what's the difference between doing all of this and evading taxes? Because I hear a lot of my followers say, how do I evade taxes? And I'm like, no, you do not want to do that. That is not the goal. So what's the difference between lessening our taxes with the tips you've given us and actually evading taxes?
Yeah, let's hopefully we change the wording. We just say how to save taxes legally. Tax evasion is really when you're like illegally not reporting income or underreporting income, or you're inflating your deductions or credits that you're not necessarily eligible for. It's going basically beyond the law in order to reduce your tax, right? Like you're violating rules and stuff to properly report your tax in an effort to kind of reduce your taxes. Whereas like tax planning, on the other hand, is claiming deductions, claiming credits, claiming ways to legitimately reduce your tax within the rules of the law, right? So it's all legitimate. It's not things that you're not underreporting income or overinflating expenses. These are all things that you're allowed to do, just like claiming childcare expenses, medical expenses, like student loan interest, specific student loan interest that typically gets mistaken a lot on a lot of returns. These sort of things that they've allowed you to do. And so there's a key difference is things that you're allowed to do versus things you're not allowed to do. Now, there's actually a third category. Not many people know about it. It's called of tax avoidance. And that's really when technically you're following all the rules, rules, but it gets a little abusive, and it doesn't apply. And it doesn't apply in majority of people's situations. It's more like a higher level rich people stuff, but it does happen here and there, and the government is cracking down on it.
Okay, good to know. So everybody, I hope that you're listening once again, and make sure you're not evading taxes, or even, I don't know about the avoiding, but make sure that you are just tax planning and making sure that you're doing what is best for your tax situation. And yeah, actively planning instead of being reactive at the end of the year. Okay, Mohammed, last question for you. So do you think you could share any experiences or success stories that you've had with a client and when you help them save taxes?
Yeah, so I'll give you two examples. One of my clients, they've never filed tax returns historically throughout their university. They just got a job. They're planning to buy a house soon. So one of the things we've done is we've gone back and filed all their previous tax returns for the previous 4 or 5 tax years and got them all their tuition credits. So it was like $40,000 of tuition credits, plus all these other credits that they didn't know that they were eligible for. So it was quite a big amount of cash that they just got. And they used those type of tuition tax credits in their first year of working outside of school. So it was a relatively big refund in that specific year as well. And then they were planning to buy a home. So we did some tax planning for them. We had them contribute to their RSP because they were making a relatively good amount of income. So the deduction was very valuable. They also contributed to their spouse's RSP through a spousal contribution. They contributed to they set up the new FHSA account. And then they also set up an FHSA account for their spouse. And so overall, it brought them to about $86,000 in deposits and a potential deposit for a home that they wanted to purchase, a huge tax savings, and then huge refunds from previous years that weren't filed. And that's just one example. There's also, I typically work with business owners and professionals. So a lot of like the success stories have to do with them. And like one woman, she started a really successful business, did very well. And her average tax rate on all her income was about 47% by incorporating and taking advantage of deductions and income splitting and different types of techniques we had. We brought her to an average of about 20% a year. So there's different things depending on your situation. And it is hard to kind of give one size fits all advice. I am trying on Twitter, but it is hard to give one size fits all advice to everybody. It really kind of depends on your situation and what you're doing.
Yeah, thank you for that. I'm sure that lady loves you because you saved her so much money in taxes. So if somebody did want to reach out to you and maybe get advice from you, and that you can obviously see their exact financial situation, how would they reach out to you?
Yeah, they can visit our website, taxheroes.ca, and submit a submission, and it goes to me and my business development team. They can also just email me, Mohammed@taxheroes.ca. Or honestly, I've been really active on Twitter and just responding to a whole bunch of DMs, even like simple questions where people might not be able to afford the tax advice and stuff. Like wherever I can, DM me on Twitter. That's also kind of the easiest thing in terms of like quick advice.
Perfect. Thank you so much, Mohammed, for coming on my channel. Everyone, I will leave all his information in the description box below. Check him out and make sure you follow him on Twitter. Again, I have learned so much from him and I'm sure you all will too.
Okay, so that is the end of the video. I hope that you enjoyed. I hope you learned a lot. I love having guests on my channel. And if you have any other guests that you would like me to bring onto my channel, just leave a comment down below. It really does help me know what you want to see because I only want to bring people that you want to see. Let me know down below what is one thing that you learned from this video, and make sure that you share this video with a friend so that it can reach the most amount of people. And if you don't share this with a friend, it basically means that you don't want them to pay less taxes and basically you're an op. So if you're an op, don't share this video, but if you're not an op, please share this video. Okay, thank you so much for watching. I will see you in the next one. Bye.